My name is Rich Gannon. I'm with Great Falls Development Authority and Small Business Development Center, and we're happy to have Martin DeWitt from the Montana SBA State Office. This webinar today is presented in partnership with the following organizations: the Montana Small Business Development Centers, Indian Country Economic Development of the Montana Department of Commerce, Native American Business Advisors, Accelerate Montana Rural Initiative, and additional support from these other host organizations: the Native American Community Development Corporation, Bear Paw Development Corporation, CSKT Economic Development Department, Plenty Doors Community Development Corporation, Nakota Anai Credit Agency, apologies if I got that last word wrong, Great Northern Development Corporation, Little Shell Tribe of Chippewa Cree Indians, People Partners for Community Development, Great Falls Development Authority, Sweetgrass Development, Shoto Area Port Authority, and the Montana Native Growth Fund. So with that, I'm going to turn it over to Martin. We will monitor the chat. Martin's somewhat limited on the questions he can answer. We've pasted in the chat already a US SBA Help Center link that may have be able to answer some of your questions. So with that, I'll turn it over to Martin. Again, I'll mute myself, but we'll kind of keep an eye on the chat. And with that, Martin, the floor is yours.
Good deal. Thank you, Rich. And I just want to start off by saying special thanks to all of our technical assistance resource partners of the SBA, which would be the small business development centers around the state, our women's business centers. We've got a couple of them in Bozeman and in Missoula, and our SCORE chapters. We've got 3 of those across the state as well, and then our Veteran Business Outreach Center, because without them we wouldn't have near the network that we have to reach people and make sure that they're getting the assistance they need during this pandemic, and to find the proper assistance that's most appropriate for their business. So special thank you to them for helping us get this out there. And as Rich stated, there is a link that's posted in the chat box there. It's a fun knowledge base. They update it. Last time I looked, they had almost 100 Q&A questions in there with answers appropriate to some specific questions. So that may be a helpful link for you to answer some commonly asked questions. In addition to that, we're going to say this number a few times, but at the bottom of the screen there is the Restaurant Revitalization Fund call center, which is the 844-279-8898. And so today we'll be able to limited on the questions that we can answer. We'll do the best we can, but just know that there's some stuff they want us to direct any technical questions into the call center. The questions that the SBA district office here in Montana is able to answer is essentially the information that is provided to the public. So if we're able to answer it better than someone else, it might just be the fact that we can find that or have found that question before, and we're able to get to it a little bit quicker than someone else. So that's the information that we have at the district office, and those are the resources to help out. Additionally, I believe they created a email address that you can send questions into, which is just simply restaurants@sba.gov is the email address. So that's another option if you want to email questions in and wait for a response. That's an option as well. So with that, we will get started into our presentation here that focuses on the Restaurant Revitalization Fund. So first off, what is the fund? It was part of the American Rescue Plan Act, became public law on March 11th of 2021. So that's an establishment date for it, which you'll find there's references to that, to the day prior to that throughout the presentation today. The American Rescue Plan Act appropriated $28.6 billion for the Restaurant Revitalization Fund. Those funds were authorized to SBA to award those funds to eligible businesses that are out there. The appropriations will remain available until they are expended, exhausted, or no longer available, right? Funds must be used for eligible uses no later than March 11th of 2023. So essentially 2 years from the date that this act came into place is where you'd be able to use eligible funds for this. So through today, we're going to get into some different options with this fund, of which relates a lot to when your business became a business, when you started operating your business, and that will go into how you calculate your fund amount that you would be eligible for. And we'll talk a little bit about eligible expenses and businesses coming up. So next, who is eligible? So as you can see, a long list here of things related to eligible entities that are businesses that are serving food or drink. One of the key components of that is that they are not permanently closed and include businesses where the public or patrons assemble for the primary purpose of being served food or drink. So all of these businesses listed is where someone comes into an establishment or to an establishment and orders food, so or drinks. Restaurants, food stands, food trucks, and food carts. Caterers, bars, saloons, lounges, taverns, and then snacks shops as well, and non-alcoholic beverage bars such as coffee shops or ice cream shops. And the next group of businesses listed on here has to consist or comprise of at least 33% of its gross receipts have to come from on-site sales to the public. So that means where they actually have to come into your facility and purchase that, or to your facility and congregate to purchase those, not pickup and delivery, not delivery services, things like that. It's where the public actually comes in. At least 33% of those gross receipts have to go for these businesses to be eligible. So those ones include bakeries, brew pubs, tasting rooms, and tap rooms. And as you can see, there's an asterisk on here, which will cover that at the bottom. Breweries and or microbreweries, also asterisk. Wineries and distilleries, also asterisk. Inns are asterisk. And licensed facilities or premises of a beverage alcohol producer where the public may taste, sample, or purchase products. Other similar places of business in which public or patrons assemble for the primary purpose of being served food or drink. So all of the entities listed above that do not have an asterisk are presumed to have greater than 33% of on-site 2019 food and beverage. So that's the expectation, is that 33% threshold for eligibility. So what's the maximum minimum you can receive? So SBA can provide up to $5 million per location, not to exceed $10 million total for the applicant and any affiliated businesses. So affiliated businesses are businesses where the owners own 51% share or more of another business or business enterprise. So if you own a restaurant and a hardware store and a clothing store, and you're a 51% share owner in the hardware store and clothing store, those are affiliated businesses. If you own 3 restaurants and in there, and each one would on its own may be eligible for up to the $5 million. However, since you are an affiliate owner of those 3 businesses, the maximum that can be divvied out to those businesses cannot exceed $10 million for that applicant. A minimum award for the program is $1,000. So any requests, or if you do your once we get into your calculations, if the amount that you can receive is less than $1,000, that will mean that you are essentially ineligible for that, as the minimum award is $1,000. So how is the program different from other SBA programs? For one, and this is kind of a key component to this, is most federal grant programs require registration through SAM, which also requires a DUNS or a cage identifier number in order to register for SAM to receive grant funds from the federal government. Within the Restaurant Revitalization Fund, applicants do not need to be registered in sam.gov, and SBA will not require a DUNS or cage identifier number. You do need a valid unexpired ITIN or individual taxpayer identification number, which you can look up at the irs.gov, and you can look up expiration frequently asked questions on there as well at irs.gov. So who is ineligible? So entities that are ineligible is an entity that is a state or local government operated business. And then as of March 13th, 2020, owns or operates, which is also together with any affiliated business with more than 20 locations, regardless of whether those locations do business under the same or different names or are in different industries. So again, if you own a group of hardware stores and clothing stores, and you own a couple restaurants, you own 2 restaurants, and the rest of the businesses you own goes over 20, you would not be eligible for this fund. So if you own essentially more than 20 businesses as of March 13th, you would be ineligible. If you have a pending application or have received a shuttered venue operators grant, you would be ineligible for the Restaurant Revitalization Fund. If you are a publicly traded company, you are ineligible. And if you are permanently closed, obviously would be ineligible, because the intent of the program is to maintain operations of these businesses or help them get back on their feet from being closed. And permanently closed does not include if you have, obviously, if you've been shut down by federal or state regulations because of the pandemic, or seasonality of the business. If the intent of the business is to reopen to regular operations, that is not considered permanently closed. If you are a nonprofit organization, you are not eligible. And again, the funding of at least $1,000. So once we get into the calculation side of things, if your calculation for max fund is less than $1,000, that would make you ineligible. So eligibility by form of organization, we've got just about everything under the sun there: C Corps, S Corps, partnerships, LLCs, limited liability companies, sole proprietors, self-employed individuals, independent contractors, tribal businesses, and LLCs taxed as S corporations or sole proprietors. So as you see a couple asterisks on there, there are B corporations are eligible, but they will have to select either a C Corp or an S Corp on the application, depending on how they're taxed. So want to visit with your accountant on that, on how you're doing that, and how you're filing your taxes to make that determination. So again, refer to your tax return to see if self-employed versus sole proprietor distinction is on there. And that's how you, and based off of how you're filing your taxes is what you're going to select with this as a cross verification, and some of the requirements refers back to taxes, as we'll see in some slides later on. So as far as franchises, who is eligible, any business concern operating as a franchise and meeting all other program requirements is eligible. The franchise must be listed on the SBA franchise directory. In the application portal, applicants will be able to look up their entity on the SBA franchise directory. And so for brands not listed in the directory, including brands that have previously been denied listing on the directory because of affiliation issues, the franchisor must submit the franchise disclosure document or other agreement and all other documents a franchisee is required to sign to franchise@sba.gov for review of SBA's other eligibility criteria. So if you're not listed on there, you'll have to work with your franchisor to have them get your franchise listed as an eligible franchise with the SBA. So bankruptcy, how that affects your eligibility of this. So the key here is this first tab. Applicants that are operating under an approved plan of reorganization under either a Chapter 11, Chapter 12, or Chapter 13 bankruptcy and meet all other program requirements are eligible for funding within the Restaurant Revitalization Fund. An applicant is not eligible if they have permanently closed again, filed a Chapter 7 liquidation bankruptcy, or filed either a Chapter 7, 11, 12, or 13 bankruptcy, but is not under an approved plan of reorganization. So permanently closed again does not include businesses who were temporarily closed their doors due to state or local restrictions or other pandemic causes, but are still in operation or have reopened, or that seasonality side of things will maintain regular operation. So how do other SBA relief programs impact the Restaurant Revitalization Fund? So Paycheck Protection Program first. Any funds already received through the Paycheck Protection Program will be subtracted from the applicant's final funding amount. The applicant is verified using their EIN, ITIN, or SSN, so security number, associated with its PPP loan. So it'll refer back to how you applied for that fund based off of which identifying number you utilized. If an applicant received a Paycheck Protection Program loan, the applicant must use the same employee identification number for its Restaurant Revitalization Fund application as it used in its Paycheck Protection Program application. If an applicant applied for a first draw PPP loan for multiple locations under one EIN and subsequently applied for a second draw PPP loan under different EINs, the applicant must provide the EINs for each entity that received the second draw PPP loans. Upon applying for Restaurant Revitalization Fund, the applicant must withdraw any outstanding PPP application. The applicant must not have a pending application or have received a shuttered venue operator grant from the SBA. So other attestations by the applicant. All applicants must certify that economic uncertainty makes the funding request necessary to support ongoing or anticipated operations. So you're certifying to the federal government that without these funds, being able to operate your business or continue operating your business would make it very difficult or impossible to continue operating your business. So it can't be that you're just getting the money for the sake of getting extra money and offsetting. Maybe you had the best year ever last year in 2020, and it ends up making it where you're not eligible for funds through the Restaurant Revitalization Fund. So eligible uses of funds. So as you can see, there's a pretty wide list here of what you can use those for. Business payroll costs, which include sick leave, business utility payments, business maintenance expenses, business supplies, including protective equipment and cleaning materials, business food and beverage expenses, including raw materials, covered supplier costs, business operating expenses, insurance, marketing, fees, licenses, legal, point of sale equipment. And if you have to do construction for your business, construction of outdoor seating is eligible. However, expansion costs are ineligible. So if you are expanding the basic footprint of your facility, that's not eligible. Purchasing other space to add on to is not eligible as well. Or leasing new space beyond your current space is not eligible. Business debt is eligible for payments on any business mortgage obligation of both principal and interest. You cannot make prepayments on that, so it does not include prepayment. You can't. So if you receive the fund and have a $20,000 outstanding note, you can't go pay $20,000 on the note. But if your payments are $1,000 a month, each month that it becomes due while you have the fund in the covered period, you can make payments of principal and interest utilizing the fund for that. And again, any business debt, both principal and interest, this does not include prepayment of principal and interest as well on this one. So only monthly minimum payments can be made, or a drawn line of credit or the balance of a credit card used solely for business expenses can be used as that under that business debt. So if you have a line of credit that is due and that's the payment that's due, that can be paid. Or if you have a balance on a credit card for use of eligible expenses that's only for those business expenses, you can pay that card as well in that covered period. So when do you have to use the funds? So the funds must be spent on expenses that were incurred between February 15th of 2020 and March 11th of 2023. So all the way back to last year in February, up to almost 2 years from now in 2023. So those eligible expenses in that time period is what those funds can be used for. If the business permanently closes after receiving the funds, the covered period will end when the business permanently closes or on March 11th of 2023, whichever occurs sooner. Any funds spent on eligible expenses by the time the covered period ends or not expensed must be returned to the federal government. So if you have funds left after March 11th of 2023, those would have to be returned to the government. So use of funds assessment. So after the total awarded funds have been exhausted, entities must provide a detailed expenditure report and certification for the required period. So until the applicant completes this use of funds assessment, beginning March is constantly in my mind in this presentation. Beginning December 2021, applicants are required to provide self-reported, unaudited data detailing use of distributed funds each year through 2023. So you're going to provide the information yourself, does not have to be audited for how you use the funds each year through 2023. SBA will provide additional guidance that outlines the detailed reporting requirements and procedures in the coming weeks. All right, so calculating your fund. So again, as I stated earlier, there's 3 different calculations. This will be the first one. All of these are based on when your business is considered in operation. So if your business is in operation, or the applicant is in operation prior to or on January 1 of 2019, you would utilize this calculation to determine your fund amount. So you would take 2019 gross receipts minus your 2020 gross receipts minus any PPP loan amounts that you received, which would give you your fund amount for the restaurant revitalization fund. So that one's a pretty simple plan. Take your 2019, subtract out 2020 receipts, take out any PPP funds that were received, and that's your fund amount that you would be eligible for. Next calculation. So this is applicants that began operations partially through 2019. So anytime during 2019, you would take your average 2019 monthly gross receipts times 12. So determine what your monthly gross receipts were for operation, multiply that times 12 to determine what an annual would look like based off of that average, and subtract 2020 gross receipts from that, and then subtract out your PPP loan amounts from there as well. So one more option here is applicants that began operations partially in 2019 also may choose to use this calculation or calculation 3. Just keep in mind that calculation 3 could require longer processing times. There's more verification that goes into that. So which one works for you best is up to you. And but keep in mind that processing times on calculation 3 that we're going to cover may take longer for the SBA to process, which can be important on a first come, first serve basis for this fund. So calculation 3, this is for applicants that began operations on or between January 1 of 2020 and March 10th of 2021. And applicants not yet open but have incurred eligible expenses as of March 11th, 2021. So any business that came in operation anytime in last year or has not yet opened, but has incurred expenses, eligible expenses as of March 11th of 2021. So this calculation, you take your total amount spent on eligible expenses between February 15th of 2020 and March 11th of 2021, and minus the 2020 and 2021 gross receipts, minus any Paycheck Protection Program loan amounts received. And that's how you get your fund amount for this. Applicants that began operations partially in 2019, again, may choose to use calculation 2 or calculation 3. Again, calculation 3 could require longer processing times. I'll take a break there, Rich, if we've got any questions.
Yeah, we got one question kind of having to do with start time. So question is, what if our business wasn't established until January of 2020? We did not anticipate the pandemic when we began our business venture. We weren't able to service the public until May of 2020, and we reside on a tribal reservation. So we have some differences in business operations. So I'm not sure if you'll be able to help answer that question there, Martin.
So they began operations in
January of 20.
May?
January of it wasn't established until January of 2020, but then because of coronavirus, they were not able to actually serve the public until May of 2020.
Okay, so that's where they fall into this calculation 2 category, where applicants began operations partially through, partially through 2019. So they started in 2020.
Yes.
So they are calculation 3. So where operations began on or between January 1st of 2020, which is their case, and March 10th, 2021. So all the way up till from January 1st of last year, all the way up through March of this year, is where that would fall. So in that instance, they would follow calculation 3 for that.
Okay, thank you.
And that's the only question?
That's the only question I've seen so far in the chat or in the Q&A. So
good deal.
Thank you.
Moving on. So what can I exclude from your 2020 gross receipts when making these calculations? So you do not have to include any of the following in your gross receipts. Obviously, your Paycheck Protection Program loan, that's subtracted out anyway afterwards, so you don't have to include that in your gross receipts. And that's first draw or second draw, either in 2020 or 2021 from that fund. This is not included in your gross receipts. Any SBA Section 1112 payments that were received, you do not have to include. SBA Economic Injury Disaster Loans, EIDL Advance, Targeted EIDL Advance, or any other grant funds received via the CARES Act. So any funds from any program from the CARES Act do not have to be included in your gross receipts. Any state or local business grants do not have to be included in your gross receipts. And if you were eligible for the Randolph-Shepard Act financial relief and restoration payments appropriation, you do not include those in your gross receipts as well for 2020. So now is how do you apply, right? So there is a platform at restaurants.sba.gov. You go right to that site, you can apply there. If you go in that site right now, or tomorrow on Friday, you can go in and create an account. There's information there on our website for sample applications and the forms that you'll use. You can start filling those out now, and then everyone can start applying on Monday, May 3rd. So just in a few days here, everyone is eligible to apply at that time. We are going to talk about some priority funding things here as well, but everyone can apply, and I'm going to continue to reiterate that as we get through these. So another way of how to apply is through a point of sale vendor is an option. So SBA is actively looking to partner with more point of sale providers. There are some that are signed up already, but they're trying to expand that reach so that you can apply through your point of sale provider. And also you can apply over the phone at 844-279-8898, which is the same as the helpline as well. So keep in mind, if you're applying over the phone, you will have longer processing times for that program. So what documents do you need to apply? So first off, you're going to need an SBA Form 3172. That must be completed, initialed, and signed. Completion of this form digitally on the SBA grant platform will satisfy that requirement of signatures and initials. Verification for tax information, which is a form, an IRS form 4506T. This is completed and signed by the applicant. And again, completion of this form digitally on the SBA grant platform will satisfy those requirements. Next, you need to have your gross receipt documentation. any of the following documents demonstrating gross receipts and, if applicable, eligible expenses. So your business tax returns, whether it's your Form 1120 or 1120F, IRS Form 1040 Schedule C or 1040 Schedule F. For partnerships use Form 1065, and when you use those, you have to include your K1s. Bank statements may be used to demonstrate those. Externally or internally prepared financial statements, such as income statements or profit and loss statements. And point of sale reports, including your IRS Form 1099-K, is what you would use to apply. In addition to that, so just as we have different dates, there's different requirements for how you do your calculations. There's how you would do these through each calculation. So this covers calculation 1 and 2. So calculation 1 and 2, the required documentation include the following: that SBA Form 3172, IRS Form 4506T, 2019 gross receipts by tax returns, 3 months of bank statements, 2020 gross receipts, and to prove those, you have to have at least one. The preferred method, which would be a federal tax return that's filed, a point of sale report. So either one of those can be used for those 2020 gross receipts. Acceptable documentation of that is externally or internally prepared financial statements, such as income statements or profit and loss statements, signed, dated, and certified as to the accuracy by the applicant. But with the accepted ones, keep in mind that may delay the review 14 days. So again, first come, first serve. You may want to, hopefully you have options for those preferred methods to be able to utilize that, so it does not delay your processing of the application. Calculation 3, a little bit more information here. After I get through this, I see there's some more things in the chat. We'll get back to that. So required through, if you're using calculation 3 method to determine your fund amount, the required documents here are your application, again, the Form 3172, tax verification, IRS Form 4506T, 3 months of bank statements, supporting account linkage validation, 2020 and 2021 gross receipts, at least one for each year. And again, there's a preferred is your 2020 federal tax returns that are filed, or 2020 federal tax returns that are prepared but not yet filed. 2020 point of sale reports or 2021 point of sale reports, whichever or both that would be applicable. Eligible expenses documentation, you need to have at least one, and required appropriate supporting documentation for specific eligible expense types. The preferred method is a CPA comfort letter, and a CPA comfort letter is a letter that is signed by a certified accountant that has reviewed the financials and is comfortable with them. So having this signed CPA comfort letter can expedite processing the application. So keep that in mind. If the applicant submits expenses related to the following categories, you must also provide the appropriate documentation. So payroll documents can be covered in your 941s. Outdoor seating expenditures, invoices and payments of those can evidence that. Any business debt can be evidenced by a lender loan statement. Accepted methods of this can include externally or internally prepared financial statements, such as income statements, profit and loss statements, signed, dated, and certified as to the accuracy by the applicant. If the applicant submits expenses related to the following categories, they have to also include the appropriate documentation. Again, those payroll documents, outdoor seating expenditures, evidence, and business debt evidence. So with that, Rich, if you want to see what questions we have there.
Yeah, a couple of questions in the chat that Jason answered, but I'll kind of summarize. People wanted to know what, if there was a list of what point of sale systems are participating. So from the SBA website, we've got Square, Toast, NCR Corporation, which is Aloha, and then a note that says, if you're working with Square or Toast, you actually do not need to register beforehand on the SBA portal. So those are the major point of sales that are participating. And then, and Clover, sorry, I guess I missed Clover. That was the actual question. And then, just a reference back to SBA Form 3172, which is the RFF application. And, either apply through there or your point of sale machine.
Correct.
I think that's all we've got there.
All right. Well, thanks, Jason. You're making my life easy here today. Good
Yeah,
man.
Jason's making it easy for me too.
Right on. All right, we'll move along and get through these. So last one.
There's one other question, Martin, sorry, before you move on, just another one came in from Stacy. Which option do we select on Form 4506T? 6, A, B, or C? That might be a question you can or cannot answer.
I'd have to see the form. I don't have it readily in front of me, I guess, of what that is. So she wants to be more specific, I guess. That might help on what those items are. And usually it's so what that form is, usually you can reference your tax returns and find the information that you need to fill that information out, because it's a verification of your tax filings is what that form is for, to ensure that you're providing information that you provided to the IRS and to ensure that fraud is not being committed through the fund. So that might answer the question, but if not, she might need to be more specific in what those items are. So I'll move along. Well, if they want to type anything more into that.
So she did type in there. So which type of transcript? Return, account, or record of account? And I'm trying to pull up that form so I can read it as well. So option A is return transcript. Option B is account transcript, or option C is record of account.
That's based off of how you're doing your accounting and filing your taxes. So it's dependent on your business. That's how you'd answer that.
Okay.
All right. What documentation? So more on what documentation needed to apply. Getting into a little bit more specifics on certain business types. So in addition to the documents on the prior slides, for applications that are a brew pub, tasting room, tap room, brewery, winery, distillery, or bakery, documents evidencing that on-site sales to the public comprise at least 33% of gross receipts for 2019, which may include tax and trade bureau forms, state or local forms filed, excuse me, or internally created reports from inventory management, sales reporting, or accounting software. For businesses that opened in 2020, the applicant's original business model should have contemplated at least 33% of gross receipts in on-site sales to the public. For applications that are an inn, documents evidencing that on-site sales of food and beverage to the public comprise at least 33% of gross receipts for 2019 for businesses open in 2020. Again, the applicant's original business model should have contemplated at least 33% of gross receipts in on-site sales of food and beverage to the public. Not moving. There we go. So how do you get help when you're applying or to answer questions again, right? So there is the call center hotline. They are supposed to have at least 150 people on at any given time while they're open, and they're open from 8 to 8 Monday through Friday. And that is Eastern time, 8 to 8, so 6 to 6 here in Montana, Monday through Friday. If you leave a message in there, the messages will be returned that are left after hours. So again, 844-279-8898. You can contact the local SBA district office, which is us for all of you here in Montana. That's us. You have a pen or you'll get this recording. You can contact me. My number is 406-459-5347. But note that the information we have to help you out is what's available to the public. So contacting us is if we know how to find that question. If we've already answered it or know how to find it faster than you flipping through there. If you're having difficulties on the site finding it, maybe we'd be able to find it that way. But if we can't, please note we will refer you back to the hotline there as well to answer those. And there is help available in multiple languages through the helpline as well. So best practices while you're working through this in application and use of funds, things to keep in mind. So for one, when applying, provide complete documentation. Applications with incomplete documentation will be rejected. The review process will restart when the complete documentation is provided. Delays could jeopardize the applicant in receiving the award. Make sure you leverage your resources. You're not required to use CPAs or accountant professionals, but remember this may help ensure a complete and well-documented application, and that could expedite the processing of your application as well. So application corrections, the SBA will not make corrections on behalf of the applicants. Applicants who require corrections will need to contact the call center hotline at 844-279-8898. Applicants who still intend to apply for a Paycheck Protection Program loan, the Restaurant Revitalization Fund applicants are advised to complete their PPP application in advance of the Restaurant Revitalization Fund application. So when can you apply? So this, again, harp on this again, the application portal is open for applications for everyone on Monday, May 3rd. Everyone can start applying on Monday, May 3rd. There is a pilot period that's happening right now where participations were randomly selected from existing Paycheck Protection Program borrowers who self-identified as members of Restaurant Revitalization Fund priority groups. Pilot participants will not receive funds until the Restaurant Revitalization Fund is open to the public at application launch. So the reasoning for the pilot period was for the staff that's processing this, as it's a new program altogether, to ensure how it's managed and how the applications are processed. For them, it's essentially a training period for the staff that's doing those. And then also to test out the site and make sure that everything was working as our last couple programs that got rolled out essentially broke down our websites and caused issues and caused those programs to be offset and move starting dates. So hopefully that is not the case here due to having this pilot period opening. Next is the priority period. So days 1 through 21. So day 1 is Monday, May 3rd through 21 days later. So during the initial 21-day priority period, SBA will accept applications from all eligible applicants. So that's all, even if you're not included in a priority group, but only applications from small businesses owned by women, veterans, and socially and economically disadvantaged applicants will be funded during this period. So you can apply if you're not in one of those priority groups, but you won't be funded during the priority period unless you are in one of those priority groups. So on day 22, all eligible applications will be processed and funded until the program funds are exhausted. So on day 22, anyone that's not in one of those priority groups, that's when your funds, those funds will start being processed. So if you do not fall in one of those priority groups and you are the very first person to apply on Monday, May 3rd, the very first applicant in there, you may not be funded until day 22, even if you're the first one in. But if you wait to apply until day 22, remember there's going to be everyone else's from 21 days of applications that are going to be processed before you. So every day you wait to apply, there's more people that are getting in line to do that. So don't wait. You can start applying on May 3rd. We want to make sure everyone in Montana gets as much opportunity and potential funding into the state as we can to help out our restaurants in Montana. All right. So what are the priority groups? So first is a small business concern that is at least 51% owned and the management and daily business operations of the applicant are controlled by one or more individuals who are women, veterans, socially and economically disadvantaged. So the applicants must self-certify on the application that they meet eligibility requirements. So again, to get to that 51%, we have an example here. An applicant that has 5 owners who each own an equal 20% share of the applicant business. 2 of the owners are veterans that fall in those categories. 1 owner is a socially and economically disadvantaged individual that falls in those categories. So 3 of them make 60%. Therefore, you're over the 51% threshold. SBA will consider this applicant to meet the requirement that at least 51% of the applicant is owned by a priority group. That's how you'd make that calculation if you have multiple owners and if they fit in those groups or do not.
Hey, Martin, we've got a question in the chat box. If you've got a minute here. So the question is, if we remodel in 2019 and we're closed for 3 months, but have been in business since 2015, can they use table 2? I think they mean calculation 2.
That is a good question that I do not have the answer to. I'm going to refer you to the helpline there as well, because I'm guessing that's to maximize your opportunity there for funding because of closure. So you'd have to contact the 844-279-8898. So stump the presenter, and it's not that hard to stump the presenter.
So do you think maybe that answer might be in that knowledge base link as well?
Possibly, but I think that's I would say that might be a rare one. I would check there. I mean, you can scroll through there and see if you can find it fairly quick. But if not, contact that helpline.
Okay.
All right.
There is another question in from Jade Heather Hinman.
So Jade says, what does the 51% say for a husband and wife partnership who are both enrolled tribal members and are located on a reservation?
So that, well, you're both Native American. It's covered right here in this slide. So
Right. Okay.
that's that socially disadvantaged individuals explanation. So if they're both enrolled and they are the two owners, as you can see here, that's socially disadvantaged individuals by the definition.
Okay.
So that should answer that once we get through this, I would hope. So socially disadvantaged individuals are those who have been subjected to racial or ethnic prejudice or cultural bias because of their identity as a member of a group without regard to their individual qualities. So individuals who are members of the following group are presumed to be socially disadvantaged: Black Americans, Hispanic Americans, Native Americans, including Alaska Natives and Native Hawaiians, Asian Pacific Americans, or subcontinent Asian Americans. Economically disadvantaged individuals are those socially disadvantaged individuals whose ability to compete in free enterprise system has been impaired due to diminished capital and credit opportunities as compared to others in the same business area who are not socially disadvantaged. So I believe that answers that question, Rich.
It does. Thank you. And hey, Martin, I'm typing the support number into the Q&A. Is it 844-279-9898? Is that right?
844-279-8898.
8898. Okay.
All right. So eligibility as a priority group applicant. So entity reorganization for purposes of qualification for the priority period will result in automatic disqualification of the award. So if you change how your business is organized, so if it really were a husband-wife type operation, and normally the husband is the majority owner, and the wife is the minority owner of less than 51%, and you change that structure to the wife being a 51% owner and the husband being a 49% owner for the purposes of this, that will result in automatic disqualification for the program and your application. So do not change the organization of your business just to fit into a priority group is the key there. Make sure that that is accurate. You are self-certifying. However, if you lie on an application to the federal government, that is committing fraud, and you are defrauding the government, which can be punishable through law. So make sure you're being honest on there and follow the rules as they apply. Don't try to defraud the government. I think that's probably the key component to that statement that's there. All right, so there are funding set-asides as well in this. There are $5 billion set aside for applicants with 2019 gross receipts of not more than $500,000. There's an additional $4 billion in set aside for applicants with 2019 gross receipts of $500,001 up to $1,500,000, and an additional $500 million set aside for applicants with 2019 gross receipts of not more than $50,000. So the intent of that is to help out what's being called the smallest of small businesses and ensure that funding is there available for them as well. But the SBA does reserve the right to reallocate these funds at the discretion of the administrator. So, which essentially would mean if they're not being utilized and there's demand elsewhere, that they can be, or if additional funds need to be in there because of demand, that's at the discretion of the administrator.
Hey, Martin, I've got another question. Just a
Perfect
husband
timing.
and wife, a husband and wife. So if a husband and wife owning situation, who should apply, the husband or the wife? Even though the wife does all the operations, but maybe she's not listed as the full owner.
She considered a 51% owner or a 50-50?
Yeah, I think, Jade, that would depend on how you've structured your business.
Yeah, if it is set up to where the wife is considered a more than 50% owner, or that 51% or more owner, that follow the priority group and utilize the women owned side of things.
They're considered 50-50 owner.
Yeah.
However, they're both, Native American on the reservation. So I still think they would be considered in the priority group.
Yeah, they're still in the priority group for socially disadvantaged.
Okay.
But as far as structure, it's they're probably both going to be listed on the application anyway.
Okay.
Since they have to know all owners of 20% or more, so they're both going to be listed on the application, and they would qualify for the priority group of socially disadvantaged, as you stated.
Right. And it's not probably going to matter. The wife is enrolled on another reservation. That's probably not going to influence in the ownership. Okay.
Nope. All tribes, federally recognized tribes, would fall in that priority group.
So Martin, we'll be able to send this slide out. It looks to me like we've been sharing this webinar link, so some people may have come in without previously registering, which means we may not have your email address. But if you want to contact me, I'm going to put my email in the chat. And if you do not get this slide deck from us directly as we follow up, let me know and I will distribute it to you.
We've only got an all panelist option to send that to, so I just put my email address into that panelist one if you want to. Oh, here's the all attendees. Never mind, I got it.
Yeah. So email me or Martin if you have further questions. I'll be able to get the slide deck out to everybody who registered for this. But if you didn't register and you just found the link today, let me know and I will get the slide deck out to you. And we have another one of these, 2 more of these trainings coming up next week. So if you know someone who missed this and would want to attend next week, let everybody make sure I've got the dates or the times correct. So on May 4th, so next Tuesday, excuse me, May 6th is Thursday. We have it at 2 p.m. and May 4th is Tuesday is at 9:30 in the morning.
Trying to get outside of the lunch hour was the thought. If it's a breakfast one later in the afternoon, so.
Right, yeah. So, okay, if that's it, Jade, the business is an applicant. If you're entering the information, it shouldn't matter. Yeah, the business is applying. It really doesn't matter if it's husband or wife who's the owner, right?
That's correct. Yep, Jason's response is correct.
Right, okay. Yep. Okay, well, thank you everybody for tuning in and get your applications ready to go on Monday.
All right, thanks Rich, thanks Jason, and thank you everyone for joining us today. Please feel free to reach out with any questions. We'll do our best to answer them. If we don't have the answers, we'll direct you to the helpline or anything else. Or if you've got questions on other programs, even non-disaster related, the SBA was here before this pandemic. It's going to be around, I hope, going forward beyond the pandemic, and make sure that we're there to help you guys out. Is our goal is to help businesses start, grow, expand, or recover, and wherever you're at in that business cycle. So feel free to reach out on any aspect, and we can assist you through technical assistance and potentially our access to capital funds as well. So thank you and have a great day.
Thank you.